Hey everyone, we just had the worst week in the US markets this week. None other and no thanks to this particular person. Yes, Donald Trump. His policies on tariffs, re-tariffs, relax, tariffs, re-tariffs, relax, sanctions has confused everybody. Yes, ladies and gentlemen, look no further. Look at Nasdaq. Nasdaq is down for the first time, 10.4%. Finally, into what we call a corrective territory. Does this mean, therefore, that Nasdaq is bound for what that red arrow has shown? For example, the red arrow goes all the way back 25 years ago, when on the 10th of March, it actually went into negative territory, 10%. Then it took 15 years for the dot-com bubble to unravel, for Nasdaq to reclaim back the original level. Or are we going to have a situation as what we've seen in the orange arrow, that for the first time, well, since 2022 really, that the Nasdaq went into a negative territory. It took a while, but it recovered quickly to even post a new high. Now, as we speak, ominously are actually lower in terms of the Dow Jones, in terms of the S&P, and in terms of President Trump was actually elected way back on 4th November. Ironic, isn't it? When Americans basically uh, had Joe Biden, they had low unemployment, you have good earnings flow through, markets hitting a new high, and they elected Donald Trump. And what has Donald Trump cost after 2.5 months? Well, lower markets, more confusion, more tariffs, and nobody knows what's going to happen next. So in this week's video, we are going to explore further how do you position your portfolio in this kind of chaotic, ever-changing, and confusing markets. Trump or Trumped this week began with a shocking news to many investors. That is, the Atlanta Federal Reserve has actually projected a possibility of a recession rearing its head. Wait a minute, ladies and gentlemen, you think, what? Didn't we had very good 4 years of growth under Joe Biden, and now we are talking in less than 3 months under Trump a possible recession? Trumped or Trumped? Well, the second thing is uncertainty has reared its head. Economic Policy Uncertainty Index. You can see, ladies and gentlemen, where we are now in 2025. The uncertainty level is one of the highest. In fact, is the only trumped by the previous uncertainty, which was caused by the pandemic on 19th of February 2020. Now you can see that this level of uncertainty that we are experiencing in the markets is even higher during the dot-com bubble in year 2000, as well as during the global financial crisis in 2007 to 2009. Strange and ironic, isn't it? This is a report on US manufacturing. You can see that in the yellow that's highlighted, what the respondents or the US manufacturers have commented is using the words tariff, using the words uncertainty, if have recurred so many times in that report. I think it was reported that for the first time ever, these two words, tariffs and uncertainty, surfaced almost 50 times. Unprecedented. So, is it Trump or Trumped? And thirdly, of course, ladies and gentlemen, there is, after the series of earnings results, there has been a reversion and a revision of downwards expectations for the first quarter of 2025. Well, to me, this is fairly good news because originally the estimates were actually on the high side. That's why we told our GCP Global investors in our last class on 8th of February that is to hold your horses, wait for a correction, because a correction in the US market occurs once every 10 months for 5%. On a 10% basis, maybe once in every 1.5 years. And we haven't had one since the lows of October 2022. One of the sharpest corrections this time around is actually on the Magnificent Seven, such that the Magnificent Seven now has been called the LAGNIFICENT Seven. Essentially, they are lagging what they used to magnify previously. Ironically, this is happening at the time. When you look at this chart, ladies and gentlemen, the earnings revision based on their latest set of results from Microsoft, Apple, Alphabet, Tesla actually have been revised upwards, whereas the rest of the 493 stocks in S&P 500 has been revised downwards. Ironic, isn't it? You know, and one of the key contributors, ladies and gentlemen, is the sharp revision downwards of Tesla's results. Not surprisingly, as we have warned previously in our class, we are avoiding Tesla because we reckon that in terms of the earnings input, essentially the earnings is going to come down. And true enough, the deliveries that they actually took uh, indicative of, actually will revise downwards and henceforth the earnings forecast. In fact, it is actually seeing one of the sharpest downward revision of earnings. And yes, I'm so happy about it because then it may then force Elon Musk to actually dodge his Dodge portfolio and spend more time on Tesla, which is and should be the case because after all, you're businessmen, not going around cutting off people's livelihood. It is essential in tariffed times like this that one has to be very focused on your portfolio. So, ladies and gentlemen, we always go for the eggs or the chicken that hatch the eggs, not the eggs themselves. For example, one of the appointees of Donald Trump is his Secretary of Agriculture, none other than Brooke Rollins. When she was interviewed this week, she says about the why that the eggs prices in the US have gone up double or even triple in certain states like Illinois. And strangely, these were areas where the farming community is very strong, you know. And you know what she say, which is really laughable, ladies and gentlemen. And she says that, for the solution to high egg prices for Americans is to get some chickens and maybe raise them in your own backyard. Oh my God, ladies and gentlemen, where is the focus? Yes, focus, ladies and gentlemen, is what we do at GCP Global. We earned money the hard way, which is actually through diligent and resourceful investing. Last week, we showed you the comments from Mr. Colin Lau, who actually attended our last class, and his wonderful comments about us, as you can see in this particular slide. Now, this week, I'll just showcase to you Mr. Sean Tan, one of the high net worth individual that we serve and family office. He commented that he was in out of the presentation materials that were presented in our last class and the amazing sharings that we actually had in our last class on 8th of February. Now, he's delighted to have signed up in the last minute, and he says that our key principle in our class is to follow the money, which is the focus that we actually have in our class. So, ladies and gentlemen, as you know, GCP Global, we specialize in providing resourceful, accurate, and logical assessment of US companies, tech companies, as well as companies that will help us to multiply our wealth. So our next class on 17th of May, if that suits you, do sign up and enjoy the early bird special in our GCP Global website. Till next week, then.